can do a cash out refi and pull all that money out tax free and use that money to buy another asset.
So the big question is, what are top agents doing to absolutely crush it in real estate? To get the answers, we interview the top real estate agents to learn their secrets to success. If you would like one-on-one access to over 26 of the top agents in the country to help you scale your business, then head over to eliteagentsecrets.com/partner, or you can just click the link in the description below. My name is Andrew Dunn.
And my name is Peter Michael. Welcome to Elite Agent Secrets.
So I wanted to, something we've mentioned along this investing journey is your second topic, which again, I think is probably one of the greatest advantages to real estate. Better than stocks, better than crypto, better than anything else is the tax benefits that come along with investing in real estate and buying real estate. I think you just look historically why so many people own land and real estate and shit, and it's like tax. Like the big reason is because they can basically avoid all the tax from their company by buying all this shit, and they just write it off. So I've prefaced it, but unpack your second thing. That's which topic.
I'm going to say here, I am not a tax professional, so please consult your tax professional.
I love that.
Very official. Very official.
Right. Don't take tax advice from me. I'm a realtor. But what I have found in taxes, so not only is our income as a real estate professional taxed at the highest possible level because we are self-employed. So, I mean, on average, we pay 50% of every dollar that we make to the government. When you own rental real estate, the government wants you to own that because they want you to provide housing for people. The business of short-term rental and long-term rental is a little bit different in how it's handled for taxes. Short-term rental is a business where a long-term rental is a rental home. So it's a little different how it's handled. But the benefits are you basically get free money every single year when you file your taxes in something that's magic called depreciation. So depreciation is saying basically that property is losing money every single year that you have it on paper. I mean, that property, is actually gaining equity and worth more every single year, not losing money. But the way the government treats it is like it's losing money. It's wearing out. So they give you depreciation on a single family house. That's 27 years that they depreciate it over. So you get this magic tax break. Then you get all the deductions for anything that you did to the property, any repairs that you made, any tools that you bought to make those repairs. And then all of those deductions come off of the income that you make for the property. And so typically 99% of the time, it's going to show that you didn't make anything on that property, or maybe you even took a loss. Now, the really magic thing of being a realtor and a full-time real estate professional is the designation, is not only do you get to take that loss on the income that you made from that property, but you also can carry that loss over to your income taxes. So the money that I make in real estate can be sheltered by my rental properties. And so I can make a lot of money, both from my rental property and from my business, and pay much less taxes than somebody else who's a traditional W-2 employee and makes very little.
I think the depreciation one is my favorite.
I know, it's magic.
I mean, this in business as well. Like you can, I know it's so we buy a car and you can write it off in 3 years because it's technically valueless. And it's like, okay, I'll buy that then. 3 years later, you basically got a free car. Depreciation's the gift that keeps on giving.
It is. And if you get really smart about it, so when you get into some of the bigger ones, you can do cost segregation studies and you can depreciate big chunks of those buildings much faster, where you can see, huge gains on your taxes, gains as far as money you pay into the government tax-wise. And so it's kind of a no-brainer to me. And when you look at your actual monthly return, I mean, if you figure out your cash on cash return or your cash flow return, you get a decent return. I mean, probably comparable to what you would get in the stock market most of the time. But when you factor in the return that you get once you add in those taxes, I mean, it can be anywhere from an 18 to a 25% return on your money. And that's incredible.
You get the asset. At the end of it all, 30 years later, you actually own the house, which is, worth 350 grand as well. So, after all that time, you then work out that house is paying you technically 10K even a year or whatever it was. Do you know what I mean? It's like, but that's a lump sum at the end of it. So it's like you get an asset you own that someone else has paid for while still paying you, and you've got all the tax benefits. So you actually paid less to the government. I mean, the long story short with the tax benefits, which is why investors love it, is essentially you can write off basically everything by buying property and keep reinvesting it and leveraging all the tax benefits that come with the real estate world. And that is why so many huge, I mean, again, I'm not sure if you know him, but probably one of the bigger investors, or at least personal brand-wise, Grant Cardone, and he's got his big financial companies and blah, 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 does whatever. And it's like, well, he's now got what? He's now up over $1 billion worth of real estate. And he did a show and he basically wrote, with buying real estate and investing other shit, he wrote off his Gulfstream jet with the benefits, with the tax breaks. Like he wrote off a fucking $50 million jet.
Well, I'm not there yet, but maybe someday. But he talked about like Brandon Turner being able to, double the number of houses or buildings or whatever. I know he does a lot of trailer parks and things, which sounds unglamorous, but really it's a great cash flow buying these trailer park homes. But as you get money in that asset, then you have this other magic thing you can do, and it's called a 1031 exchange, where you can pull all of that money out of that asset and reinvest it tax-free into another asset. Or even better, you don't even have to get rid of that asset. You can do a cash out refi and pull all that money out tax-free and use that money to buy another asset. So the last couple of years when rates were so low and values were skyrocketing, we did cash out refis on pretty much all of the properties that we own. And that allowed us to buy some smaller multifamilies that we wanted to get into. I don't own anything that has hundreds of units in it, but we own some, 4plexes, 8plexes, those kind of things. And we doubled our doors in the last 2 years by doing that. And so it's incredible the different benefits that you can have and have it be virtually tax-free.
So it's this crazy compounding nature that we touched on with Brandon. It was a decade to get to say 300 or whatever it was, and then it was 2 years to get to 3,000. And like he did it through syndication and buying like huge buildings. But it's like, it definitely, investing is one of the things that when you kind of figure it out and you're pulling money out of all the others to invest as down payments in these bigger and bigger properties, all of a sudden you need like 6 million on like 300 units or 500, what, do you know what I mean? Whatever it is. And it's like, well, I can pull that out of these other 30 properties, 50 properties that I've got. And now I've gone from 50 to 350 in one deal. And then you get all the additional benefits, which I love. Thanks for listening to this episode. If you would like one-on-one access to over 26 of the top agents in the country to help you scale your business, then head over to eliteagentsecrets.com/partner, or you can just click the link in the description below.